Yeah. So, good evening, everyone. So, today's session is actually on building a MIS. So, like everybody knows, like MIS is Management Information System. So, be it a startup or an SME or whatever type of business you are running, it's always important to know about like what is happening in your business. And mainly, like kind of people typically have a doubt like how to build an MIS, what all metrics to be tracked in an MIS, what are the key elements of an MIS, what is actually an MIS. So people think that MIS is just P&L, but MIS is beyond P&L. So today we'll be discussing in detail about like kind of what is an MIS, what not is an MIS, what metrics to track. Okay. So primarily, like kind of, we'll address the first question. I mean, typically, like kind of, in most of the cases, what happens is like kind of, MIS reports does not become of much use to the company, be it startup or be it a like kind of SME. What happens is like kind of the most of the MIS reports, what typically they generate in-house or they ask a consultant to do, is not of much use to the startup or the SME. Why such MIS report is not useful is because of few reasons. One is mainly because of data overload. So when I say data overload, typically like kind of people believe MIS to be kind of say if you can mute yourself. Okay. So so typically the primary reason why MIS fail is actually because of the data overload. So when I say data overload, uh, typically people believe MIS to be a spreadsheet, uh, and like enough there is a lot of data in it. So the management has to find out which data is actually useful, which is not useful. There will be few things which actually needn't be tracked, or like kind of or it's not formatted in. For example, if you have a P&L report, it should actually be in an abridged format, like no, rather than giving it in a detailed manner. Maybe like end of the detailed discussion should happen after a while. Instead of doing that, if you're giving a P&L report which is like 500 line items, that is going to be a data overload for the management. You won't get time to kind of go through all the line items. So the primary reason why an MIS fail is because of the data overload. It's actually a spreadsheet full of detail with no hierarchy, make it hard to see the signal in the noise. Okay, because there are a lot of data, you don't understand like which data is important. Then the next one is lack of insight. Numbers without commentary do not tell a story or drive actions. So there will be few numbers given, but what is it like indicating? What is the kind of indication that have? For example, you are giving a cash flow statement without mentioning what is the runway, or like without telling what the actual burn is. You're just giving like a graph, like what this is the inflow, this is the outflow. You're not mentioning like what is the net cash flow, or like how much money you have in the bank account, what is the runway. Without these insights, just giving pure numbers like won't be of much help to the management. So lack of insight is another point wherein why MIS reports fail. Then we have no structures, reports are inconsistent, missing key sections or delivered ad hoc. Like we don't have a proper structure. Like you have a MIS report this week, or like this month. The next month it's not coming. This month it's coming on 15th. Next month it's coming on 20th. The next month it's coming on 5th. So when there is no proper structure and like proper meeting not happening, this is going to be another problem. Like there's no structure. Then we have no accountability. So when I say no accountability, there is no owner to drive follow-ups and close the loop on issues. So when there should be somebody taking the ownership of the MIS, like be it preparation or like sending it to the management, sending it to the concerned teams, then like taking a meeting out of it, like recording what are the action points to be delivered in the next meeting, taking the follow-up on such action item. There should be a kind of accountability. So typically, like this just goes as a WhatsApp message or an email. So that is another reason why MIS reports fail. Because maybe in the report there will be a lot of insights, but there is no proper like action being taken, or like meetings are not happening properly. It just lands in your inbox and it stays there. Okay, what MIS is and what MIS is not. Okay, so an MIS is a system that gathers, processes, and analyzes data to support decision. It integrates information across departments for efficiency, enables timely response to changing conditions. Okay, so basically, MIS is not just a report; it's actually a system. Like you're building a process out of it. The data flow should be coming from multiple departments. Then there would be somebody collating these kind of reports. There is a specific timeline for this, on what date it should be presented. So all those things are there. It's not just like kind of data collection, preparing the report and all. And based on the report what you have received, there should be like kind of processes run on the report. For example, the marketing spend we are doing every month. What is the like kind of ROAS, revenue on ad spend? Maybe like kind of we can track those things month on month, or maybe like kind of we'll have to track the result with the next month. This month spend we should be tracking with next month. So what is going right, what is going wrong, all sort of analysis should be done. Then it should be integrated across different departments. Like I told, there should be data from the sales, there should be data from the marketing team, there should be data from the operations team, there should be data from finance and every team, and enables timely responses to changing conditions. So if there is a condition changing in the business, like there is a scenario in the business wherein your burn is like kind of increasing, that should be like kind of pointed out by the MIS system in place. So once like kind of those things are pointed out, then only we can take action to like kind of reduce the burn in the business. Okay, so these are the MIS is the system that gathers, process, and analyze data to support decision, integrates information across departments for efficiency, enables time changing conditions. And what an MIS is not a dump of raw data with no narrative. So you're just giving like kind of the P&L, sending the P&L from the Tally or Zoho, you're extracting and sending. That's not an MIS. A scoreboard with vanity metrics only. So you're giving some random numbers, like which is not like enough useful for the business. Giving few scoreboard, giving few numbers, neatly designed graph and chart, but with lot of what? I mean, not useful metrics. Then static. It evolves with strategy and business needs. So if an MIS is static, that is also going to be a problem, because at different stage of your business, your need is also different. You'll have to track different metrics. Like kind of few things we track down, then like kind of we start to monitor such things. For example, it can be a burn. Then we understand that this is going to be optimized now, or it is coming under control now. After some point, like enough, maybe we'll track it for 5 6 months again. Then maybe like enough, there will be a point wherein we needn't track this every month. This need to be tracked only like enough in every quarter. There it can be like that also. So based on the business requirement, you should actually like kind of make your MIS dynamic. You'll have to make changes in the MIS report. Okay. Then who are the key stakeholders for MIS? Primary, it's the executive team. They sets the strategy and needs a high level view. So when I say executive team, it would be the founders, or it could be directors, and all those person. Then finance actually monitors the cash flow and financial health. So finance is a key stakeholder. Then sales and marketing, they need to track the pipeline. What is the conversion rate? How much new clients they have onboarded? All those things. Then we have operations department overseeing the service delivery and utilization. This typically happens in a service company. So what is the like kind of capacity utilization? Is there any idle resources? All those things would be tracked by operations. Then we have product or tech, monitors user engagement and performance. Like if there is a product or tech department, they'll be tracking like kind of how many monthly users are coming, like kind of what is the performance, how much time they are spending in the app, or like kind of the website, what we are selling as a service to the customer. Okay, so these are the key stakeholders. There can be other stakeholders also. There can be a HR based MIS, wherein based on the attendance and all those things. But I mean, to speak on level, these are the main items. It's first is the executive team, then the finance team, sales and marketing, operations, product or tech. Okay. Then what are the core MIS sections? So if you ask me like kind of what are the components of an MIS, these are actually kind of the must have components in an MIS. Uh, if you ask me, should this be the only item? The answer would be no. Like kind of there can be other things also coming in an MIS. But like kind of, I mean, these items essentially should be there in an MIS. First is the profitability snapshot. So what is the how is the business going? Like when I say snapshot, like I've told earlier, it shouldn't be a very detailed one. There shouldn't be too much of line items in the profitability snapshot. It can be an abridged format. If the management or somebody has any like kind of query, then maybe like kind of we can have an in-depth analysis on the what expense to be tracked or like kind of what sort of revenue to be tracked and all those things. Then cash flow check. What is the current burn? So there is actually a difference between profitability and cash flow, which I've told in my previous session also. So profitability is actually nothing but your invoice or like kind of income minus expense, but cash flow is the actual outflow of the cash. For example, if you're buying an asset that doesn't form part of your profitability, but that is a part of your cash flow. So cash flow should also be monitored very very closely, and like kind of you should understand what is the monthly burn that you're having, like what is your cash inflow minus cash outflow, that is your net burn, and what money you have in your bank account. With this level of burn, how much money you will be able to survive, which is actually the runway. So those are the things which again we'll have to track. Okay. Then budget versus actual. Like I said, like in every business or in a bit anything, like there should be a budget and like kind of clear cut plan, execution plan for what you're doing. This much of revenue we should be achieving, which can be called as a target also. So what if this much of revenue comes in, and what is the expenses that we can do across this month? And we will have to compare this with the actual numbers also. Why? Because see, in the initial few months, typically what happens is that budget versus actual, there will be a lot of variance. That is primarily because of the judgment errors or the errors we make while we take few assumptions. Okay. But over a period like after 3 to 6 months, what happens is like kind of we'll get more clarity about the business, or like kind of more clarity about how things are moving ahead. So in that case, like what happens is like kind of budget versus actual would be a more like kind of I mean would be much or more or less equal. But if there is a huge variation, there would be something coming out of the budget. For example, uh, I mean, the sales team comes and tell you like enough they need to hire additional two resources, but we have already budget for the like end of the month set, and the sales team is coming and telling we need two additional resources. They should have told it upfront. So there will be like, then only we'll be able to like end of track down these things and like end of maybe control the hiring process or reduce the burn. And when the company is trying to reduce the burn and the sales team without telling anything in the previous meeting, and in this month you are coming and telling like end of we need two people, that is going to be out of budget. So those are things which actually we need to track. So in business, if you can reduce the surprises, you will have more predictability and like kind of more understanding of the business. That is why we need to actually budget and compare it with the actuals to have those predictability. Then business KPIs is another one. When I say KPI, it is key performance indicators. In different business, it can be different metrics. For example, if it is a uh, I mean, say if it is a consulting business like mine, maybe uh, I would be tracking the number of DD assignments that I've gotten. So that can be a KPI. Because I'm focusing more on DDs, I want my DD number to be tracked. So that can be a KPI for me. If you are a like kind of digital marketing company or a marketing company, the number of clients onboarded can be a KPI. The number of retainer clients can be an KPI. So anything can be a KPI. So you should be defining what is your KPI. There will be few industry standard KPIs, but on top of that, you can define your own KPI and like kind of make it part of your MIS. Okay, there is no hard and fast rules like this only should be the KPI. What you think is driving the business should be your KPI, but definitely like kind of revenue should be an element. Okay, then we have action items and flags. Like, based on whatever numbers we have mentioned here from 1 to 4, what is the action items and flags? Like for example, I told two people, like two sales hire, that is a flag. Okay, so we need to fix it. So if we put extra money to hire two salespeople, if the revenue is going to come in, means I mean that's an action item. We need to hire those two people. Or if like kind of in the budget versus actual, we understand that the transport expense is more than the budget. So in that case, the action item would be to control the transport expense. Why is such a high expense happening? What needs to be done to reduce such expense? So that is the action items and flags. Then the detailed pages. When I say detailed pages, like I told, here profitability, it's just a snapshot. The details would be mentioned in the like kind of later section. If anyone want to review such things, they can review. Okay. Then coming again, explaining in detail the profitability snapshot. Don't mind the graph here. I've like in the coming slides also there will be graph which I have just kept like kind of as a image like for the slide. Nothing to do with the MIS part or anything. So it shouldn't be like this. Okay, I mean it can be in your own manner, whatever manner you feel it is good or like kind of visually appealing for you or easily understandable. That is the thing what you should be tracking. So focus on the content, not on the image. Okay. So in profitability snapshot, we'll be actually tracking the revenue, what is the gross margin, and what is the net margin. This is to understand like kind of maybe like kind of which are the revenue drivers for us. If we have multiple uh, revenue coming in, but multiple streams of revenue, which stream of revenue is giving us more revenue? We need to take gross margin, like what is the, I mean, the profitability that we have from a product or a service. That also we need to kind of take into consideration. What is the gross margin? And again, like we should have a segment-wise margin report, or a segment-wise profitability report also. Because if you see, if we are selling, say, 5 products, or we are having 5 category of revenue in a service business, we should be able to understand which kind of revenue is giving us more margin. In fact, we'll have to focus more on such revenue to generate more profit. Okay. So gross margin and all those things we'll have to track. So we'll have to track the revenue, we have to track the gross margin, we'll have to track the net income in the profitability snapshot. Apart from that, whatever needs to be tracked, like it can be a management decision. Okay. Then we have cash flow check and runway. What I've told earlier, cash flow, like what is the inflow and outflow. So based on this, we will be able to track the burn rate. When I say burn rate, it is nothing but the cash outflow minus cash inflow. So in a month, if you are spending say 5 lakh rupees as a, for example, the 10 lakh rupees is your inflow and 15 lakh is your outflow. That means your cash burn is 5 lakh rupees per month. And you have say 20 lakhs in your account. You're looking at a runway of 20 divided by 5, which is 4 months. So all these things should be actually there in your cash flow report. And ideally, like kind of, we should be having 3 to 6 months of runway because typically in startup companies, they should be having at least 3 to 6 months of runway. Why? Because any funding round is going to take you 3 to 6 months. So you should be having that much amount in your bank account to easily go for a fundraise and like kind of not be in a situation where you completely burn out. Okay. So you need to track the burn rate and what is the runway. So here maintain reserves equal to several months of expense to weather volatility. Okay. Then again, budget versus actual. So what is the revenue budget we have kept? What is the actual? Then what is the expenses we have budgeted and what is the actual? So this again, like end of this can be in a tabular format, like in the P&L format, what we have told about. And like end of we have to track all those things. For example, the key insights, if we start tracking would be like kind of revenue lagged budget by 5% across all quarters. Expenses were below budget, opportunity to reinvest. For example, you have budgeted like 10 lakh rupees for this quarter, but the actual expense came only 7 lakhs and still you have that 3 lakh. Maybe like kind of that 3 lakh you can reinvest in sales or like kind of in your marketing activity and try to generate more revenue. Or maybe like kind of there could be an asset requirement. Maybe you can purchase some asset. So that can also happen. Investigate root causes of revenue shortfall and adjust forecast. So there can be chances like kind of what I have typically seen is founders or typically always become like kind of over ambitious when they do a budget or a target. What happens is they set very ambitious numbers, which actually is not realistically possible with the kind of sales team or like with the kind of operations team they have, because you need sales team to bring in new clients and you need operations team to maintain such clients. Okay. So what happens is if you don't have enough of sales team and operations team, your revenue is not going to increase. But still, like I've seen a trend wherein founders actually like target the revenue to be so much without increasing the operations expense or like without increasing the salary or the number of people. So there should be like a invest that when we start comparing the budget with actual only, we tend to understand that there was a mistake when we actually budgeted the revenue. And from this mistake, we should learn like this is the reason why the revenue has come short. And for this reason, we should be adjusting the budget for the next month. So you are not going to achieve the revenue for next month. with the same level of expense. So that is the learning that you will be having when you start comparing revenue budget with your revenue actuals. Okay. So key business KPIs, like I've marked few sectors, categories, and like what are the metrics. See, these are like indicative things only. I mean, few list which I have felt like is important. There can be other KPIs also. So in a service, it can be utilization, like percentage of billable hours to total available hours. Okay. So maybe like in service, it's always people hours being billed. So like what is the total hours that you have billed to your customer client versus what is the total available hours? Why there is a dip? The target should be 70 to 80%. Typically, that's the best thing what we can have, because there will be idle time. There will be like unproductive hours and all those things. So if it is below 50%, then that's an alarming situation. There is like resource wastage. So either maybe like you'll have to cut down on the resource, or like you'll have to implement strict strategies to like make the uh, unproductive resources productive. Okay. Then we have realization rate, revenue per hour billed. So we have to track like for example, 10 lakh revenue this month, and we have 10 employees working 8 hours into 30, say 20 days. So 20 into 8, 160 into 10, 1,600 hours. So the revenue per hour billed is 10 lakh divided by 1,600. So we'll have to track this metric month over month. This should ideally go up. Why it should ideally go up is because like over the period, uh, you tend to like increase the brand value. Then and like when you start generating a revenue per hour more than what you have done in the previous month, means that your gross margin will also increase, because with so much of hours you have built this much amount, with next month with the same hours you are going to build more. So that should actually be a metric. If it is coming down, that is going to be an alarming situation. Okay. Then gross profit per person, like what is the per employee, I mean gross margin that you are getting. That also we need to monitor the trend. And whatever KPIs or like whatever numbers we are tracking, everything should be tracked on a periodic base. When I say periodic, like it should be compared with the previous period, it should be compared with the previous month, it should be compared with the previous year. Whatever numbers you think like or whatever period you think like it should be compared with, that we should be tracking. Okay. Then in manufacturing, again, its gross margin is again another next important thing. It's revenue minus cost of goods sold, like everyone knows that. So gross margin helps you in better pricing, also to understand like how your inventories are placed, is there any dead stock and all those things. Like when you start tracking GP margin and you understand that your margin is depleting, there could be some internal issues. So you will have to like again see, MIS may not be telling you what the issue is, but MIS would be telling you there is an issue. We'll have to investigate and find out the actual issue. Okay. Then we have cash conversion cycle, days to convert inventory into cash. For example, you're buying like X amount of inventory today, that goes to the production today. In 10 days, the products happen. Then the uh, supplier gives the order in next 5 days. The good is shipped. Then it reaches the supplier in next 10 days. The supplier has a 30 days credit. The fund is received after 30. So typically, like you buy 1 rupee of inventory today, you convert it into cash in 60 days. So ideally, you will have to shorten this thing for better cash flow. That means that you will be having more cash to deploy. So cash conversion cycle is another important metric for a manufacturing concern. Then when it comes to SaaS, it's MRR and ARR. MRR is monthly recurring revenue, and ARR is annual recurring revenue. So when I say MRR, like it's something like if you are doing 10 lakh this month, that means 10 lakh into 12 is the ARR. So this is a key metric which investor tracks. And like if you also have an idea, like with this run rate, you are going to attain at least this amount of revenue over the next 12 months. Then CAC and churn. CAC is cost to acquire a customer, or customer acquisition cost. Churn rate is the number of customers leaving your platform. So both of this should actually reduce over a period of time. Why the CAC should reduce is because after a period, your brand value increases and a lot of organic customers will be coming into your business. So when the organic customers come into your business, what happens is, so for example, the formula for CAC is cost spent divided by number of customers acquired. So when I say cost spend, it can be marketing spend, It can be like kind of referral commissions and all those things, divided by number of new customers. So when over a period, when you have enough of brand value and a lot of organic customers come in, the denominator increases. In that case, what happens is the CAC reduces. Okay, when the denominator increases, automatically the CAC will be reducing, because we are dividing it by a higher number. Okay, so the CAC and churn rate should actually reduce over a period. CAC would be definitely reducing if you are providing good service. You will get a lot of organic customers and it will reduce. And churn rate also, like kind of, it's based on how good you are treating the customers and how well the customer is being with you. Then the next thing is CLTV and ARPU. CLTV is customer lifetime value, and ARPU is average revenue per user. Okay, so like kind of, if you onboard a new customer, what is the periodicity that the customer is going to spend? I mean, be with you for a longer time. So CLTV, we will be actually comparing it with the CAC. So you are spending say 15 rupees to, or say 10,000 rupees to acquire a customer. So that, what is the in the month one, that customer may be giving you only 3,000 rupees of revenue. So when you compare CAC with the customer revenue in 1 month, that is going to be a loss. But this customer on an average stays with us for say 20 months. So 20 into 3,000, that's going to be 60,000. So 60,000 is the overall revenue we are going to make with this customer by spending 10,000 rupees. So those are the metrics we'll have to track. Okay, then average revenue per user is like enough total revenue divided by number of users. This also should be increasing over a period of time to make more margins. Then user engagement and retention, this actually like kind of the product team or someone would be tracking what is the active users, what is the duration they are spending in the website, what is the retention, and all those things. This also should be improving. Okay, choose KPIs that align with your strategic objectives and monitor them consistently. Okay, next we'll go to the action items and red flag. Okay, so action items are like kind of, again, like I've told, MIS would be telling you like there is a problem. You'll have to you'll have to investigate and understand that what is the root cause of the problem and then fix for it. So investigate revenue shortfall and adjust pricing or marketing. That can be an action item. I'm giving few examples here. Allocate savings from cost underspend to strategic investments. Like I've told earlier, you have budgeted for 10 lakh rupees this month, but you spend only 7 lakh. So there is a 3 lakh. This amount you can like kind of keep to a separate bank account and plan for maybe like kind of new salesperson, or like kind of buy a new software, whatever it is. Review labor utilization and training needs. For example, like I've told earlier, if say a task X is taking, the average time taken to do a service is more by like enough majority of the employees, but the ideal time what we expect is like enough much lower. That means that there is a problem in the labor utilization. Maybe like enough there is a lot of idle time, or like enough we have to train the labor in a much more effective way, and or like enough help them do work in a much more effective way. So that can be another action item. Okay, then red flags can be like kind of cash runway falling below recommended threshold. Like if you're like having two runway, then that is going to be a problem. That's a red flag. Then rising churn or falling user engagement, like the number of the like kind of the percentage of customers leaving the platform is keeping on increasing. That means that there is some problem with the product, or like kind of the service that you're offering. And falling user engagement, maybe like if you're an app or a website, the time they are spending in the app is keeping on reducing, means that that's again going to be another challenge. Then declining gross margin or utilization, it can be like kind of maybe your costs are increasing and you didn't increase the price accordingly, or like kind of the costs are getting the revenue, for some reason you will have to reduce the pricing, maybe because of a competitor thing or something, which you actually didn't for with the market condition you just use the price. But when you have a proper MIS only, you will understand that what is the impact that you're going to have in the P&L. Okay, then guidelines for effective MIS: focus on metric that aligns with your strategy, avoid vanity measures. Like I've told, there is no hard and fast rules to MIS. So whatever metric you feel that is going to be important for your business, that should be tracked, or like kind of that motivates, or like kind of that gives you more clarity on your business, that should be tracked, rather than like kind of measuring unwanted numbers. Okay, and provide high level overview first with supporting detail on separate pages that I have already told. Use chart and visuals to tell a story, not tables of numbers. Chart and visuals, when I say chart and visuals, it should be easily understandable also. Don't use complex chart. Use easily understandable charts, which actually kind of in one glance itself you get an idea of what you're trying to communicate. Assign clear ownership to produce and follow up on reports. Okay, so there should be ownership given. There should be follow up meetings happening, and there should be like kind of all those I mean actionable measures, what they have done, all those things should be tracked properly. Schedule regular reviews and capture decisions and action items. Okay, then timeline. I've noted here, aim to close the books within 5 to 7 days after month end. Small teams may take up to 14 days, but faster closes enable timely decision. Like I've already told, if you try to close your book by end of the same month itself, or like kind of maybe in the first or second day of the month, you will have your MIS report ready by 5th of the next month, which means that you get more time to plan for the next month. The more your accounts or books delay, that is going to be a problem. That is why like kind of in most of the small business or like kind of early stage startup, what happens is that they don't have a proper bookkeeping process. And when you don't have a proper bookkeeping process, or when you don't have a proper data maintaining track, what happens is these sort of insights are not available in front of you. You'll not be having any clarity on what is happening in your business. So firstly, to ensure data is the primary thing that you need to do before building an MIS. And at what timeline we can close the books is actually very important. If you close it at the earliest, well and good. That means that you'll have more time to act upon. Then process timeline and ownership. So primary thing is collect data. It is typically done by finance and ops team. Then analyze and draft. It is done by financial planning and analysis team, which typically is the finance team, or like kind of CFO, finance head, or your virtual CFO, or whoever it is. Then review and finalize is the execution team. Then present and decide all stakeholders. So firstly, it will be sent to the executive team, and based on that, in the 7th day, we'll be having a all team meeting and like kind of telling what is important. Clear roles and deadlines ensure accountability and timely reporting. Okay. So common mistakes what people do when doing an MIS: tracking vanity metrics instead of drivers of value. This could be because of your following some reel or like kind of some content which you feel like this should be the thing tracked, but what you feel like kind of is going to impact your business is important. But on top of that, whatever I've told earlier in the this one, that should be tracked, the profitability, cash flow, and everything. Apart from that, whatever you feel is important, you should be tracking. Again, revenue first approach is a very good thing. You should be tracking your revenue month on month. It should keep on growing, because that is the actual number which actually helps, which keeps on motivating you, and like kind of which is the reality, like kind of your business is growing. Okay. Presenting data without commentary or context, using inconsistent periods or infrequent updates. So you're giving MIS this month, next month it is not there. Then in the third month again you have data. That doesn't help you. And you are comparing this month report with 3 month back report, wherein like if you never had a good sales team or such thing, it also may not be of no use. Neglecting to assign clear honors and follow-up actions. Failing to evolve the MIS as the business strategy changes. So again, like I've told, when your business strategy changes, for example, you are pivoting from one model to another, or you are bringing in new revenue drivers, or you're starting an additional stream of business. Those things also need to like kind of, based on that, your MIS also should keep on evolving. If you keep on tracking the old metrics and you are not tracking the new metrics, which is important for the new revenue drivers, that is also going to cost you so much. Okay. So I'm concluding the slide. After this, I'll just present a sample MIS, which is a like kind of a blank MIS kind of thing in a Word file. Okay. So key takeaways: design your MIS to support your strategy and tell a story. Use visuals to uncover trends and focus on actionable insights. Assign ownership, close the loop, and evolve your MIS over time. The next steps would be like kind of implement this framework in your organization, pilot with key stakeholders and refine based on feedback, build a culture of continuous improvement. This is something what you'll have to do to ensure that your business is growing, or like kind of you'll have to track the things, you'll have to have accountability and all those things. Okay. Yeah. So that's it from the slide part. I'll just present a like kind of sample MIS report as well. Doesn't have any data or anything. It's just a Word file, just a template. Yeah. So yeah, is my screen visible?
Yes.
Yeah. So monthly information, monthly management information system. So here we have the see, it can be a PPT, it can be a Word file, or it can be a PDF, whatever it is. So here, like kind of for the ease of just presenting what should be the content, I am doing it in a Word file. Okay. So it ideally should be visually good, and you should be able to see all the things in a nutshell. Okay. So again, company name, month and year for which month it is prepared, what is the date you have prepared, and what is the currency. Typically, it's INR. If you have multi country accounts or like that, you'll have to, I mean, mention the currency as well. Then, what is the revenue for current month? What is the revenue for like month? Handle thing. We have closed. Then management. Yeah, I'm sorry. Something happened with my network. I'm audible. Yeah, I'm really sorry. Like it's not the network issue, some power outage or something happened, and that's so. Am I audible now?
Yes, yes.
Just a second, I'll try to. Mm, yeah. So am I audible now? Hello.
Yeah, yeah, yeah.
Okay. Okay. So management view, we'll have to mention in the bottom, like what is the summary of overall performance, like how the revenue has gone up, and what is it a positive trend? Is it a negative trend? Is the alarming thing about this month executive summary, and all those things we'll mention here. Then again, we have the profitability snapshot, wherein what is the revenue, what is the cost of goods sold, what is the GP, what is the operating expense, what is the net profit. Are margins improving or under pressure? What is the key reason? Everything in one line. Like it should be pointers, like kind of thing, and not too much in detail. Then cash flow snapshot, opening cash balance. What is the cash inflow? What is the cash outflow? What is the closing cash balance? And what is the runway? At this run rate, we have this much months of runway. Then budget versus actual. Like what is the revenue budget? What is the actual? What is the variance like? With when I say major expense side, it can be multiple expense side. Okay. So it just needn't be like kind of collectively all expensive. It can be multiple expensive. What is the budgeted? What is the actual? What is the variance like? Then we have cash burn or like kind of EBITDA. What is the budgeted? What is the actual? And what is the variance? Reason for major variance, if any. Like for example, if there is a revenue dip, what has happened? What is the reason? Or if there is a reason why which major expense has gone up. For example, your current bill has gone up. So what has happened? Like it could be because I mean in Kerala we have something like kind of the deposit increasing. So based on that, the current bill may go up in some months. So it can be some reason like that. I'm just giving some hypothetical situations. So what is the reason why which it has gone up and such things? Then KPIs like KPI 1, what is the current month KPI, previous month KPI, and all those things, KPI 2, KPI 3, whatever it is. Then what is the red flags and action points? What are the major negatives you have observed, and what is the action points to be taken? Okay, and review and sign off. Who has done the review and who has signed off the document, and what is the next review date? This is a sample MIS. I'll be sharing this to everyone over email. I mean, it needn't be a full-fledged template. This is just a sample template. Yeah, so that's it from my end from the presentation part of view. If you have any questions, you can ask now. If anyone have any questions, you can ask.
Yeah. Thank you for the session. Like,
Yeah, just
yeah, for example, a commercial real estate, like we construct a building and we give it on rent. So could you just give me like now what should be that KPI, how to track that metrics, what is the profitability and all? Could you give some points?
I mean, see, one metric which you would be tracking would be what is the revenue per asset that you have. So that is something what you should be tracking. And you will have to do a asset-wise P&L also. Because if there could be some building or some asset which is actually causing loss for you. Maybe the salary expense is high there, and you are not getting too much rent there. So that is another thing which you will have to track. Then maybe if you are adding more assets, what is the number of assets that you have added? What is the number of what is the occupancy? I don't know, like if it's kind of an Airbnb kind of thing, it could be like the number of days people have occupied. So that is occupancy rate is something like that. But if you're giving for rent to office spaces, maybe what is the rent collected, what is the rent due, and rent due versus rent collected. For example, if you're running a co-working space, there will be a lot of outstanding invoices. So is there a proper collection mechanism for that, and all those things?
And how will we calculate the profitability?
We are telling asset wise.
Yeah, 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 asset wise.
So asset wise is nothing but like what is the revenue that you've generated from that asset, and what is the expense that you have incurred specifically for that asset. So you get the gross margin for that asset, and the remaining indirect expenses like corporate office expense and all those things that you should be apportioning based on some metric. It can be based on the square feet, or it can be based on what I mean, the maximum potential revenue, whatever you feel like is important denominator. Based on that, you should be dividing and putting it across different assets.
Thank you very much. Thank you.
Does anyone else have any question?
Hi, Abhijit.
Yeah, hi Jagdish.
So there was while you have told that the KPI for some service industry and some business will be different for them, basically different for all. So how
Yeah.
a founder or startup owner decide that a particular thing is relevant for him or can be classified as a KPI or not KPI. So what elements is considered while deciding the KPI?
Okay. So basically, there will be an industry standard. For example, if you are a consulting company, you can search what are the KPIs to be tracked in a consulting company. So there will be general industry specific KPIs. On top of that, few things we need to track is for example, I have a client. Okay. So typically, you are a chartered accountant, you know well, like we prepare the cash flow in the indirect method. But
Hmm.
the indirect method is actually difficult for the founders to follow and understand, because
Perfect.
the change in working capital changes, all those things are a bit difficult for the founder to understand. So what we typically do is we create a P&L in a cash flow manner. Based on the actual cash flow, we create a P&L for them. They understand such things in a more different way. But if you ask me, it is an industry specific kind of industry standard thing. It's not an industry standard thing. Industry standard is indirect method. But here we are like kind of breaking conventional or like kind of generally acceptable accounting principles so that the client has more understanding of his own business. Then like kind of for him, it's important to bifurcate between what is his retainer clients and what is his project clients, because he have multiple streams of revenue. So those things we are helping him track. Yeah.
So KPI can be decided by founder on their own requirement basis. The things which you need to track.
Yeah,
Or
correct. But again, like don't track like kind of unwanted metrics also. That can also happen. Once you start like kind of tracking few things and it keeps on piling up, there will be a point wherein the KPIs are so much that you don't give importance to any of the KPI. So that can also happen. So like kind of which should be tracked only should be tracked, but it can be like kind of based on founders understanding of the business and what he thinks to be uh, tracked and all. But like kind of all these things what I've told, like revenue, the number of customers onboarded, average revenue per customer, all those are important KPIs.
okay. So suppose someone is in a B2B business and is a manufacturing business and he has a long working capital.
Mhm.
Okay. So it is okay that he tracked the debtors more than 180 days and 90 days because it's a block his yeah, working capital.
Yeah.
So it is okay to track the all things like who a customer making payment beyond the 90 days and all.
Mhm. I mean, yeah, it's actually important to understand, like, see again, that forms part of the detailed MIS. There, the primary element what should be triggering is what is the average customer days. If it is, or the average debtor period, if that is keeping on increasing, that means that multiple customers are like kind of giving you money after the uh, like kind of what used to be the
Yeah,
previous day.
yeah, stipulated time.
So on that, like we'll be evaluating and like we'll be digging deeper and understanding which customers are paying you after a longer period of time. Then
Perfect.
like we need to understand, build the strategy of whether to reduce the sales to such customers. But if it is a major customer, we'll have to try to negotiate them, or we'll have to try to give them a discounting offer. Like if you pay within 90 days, we'll be giving you this much discount.
Okay.
Again, we'll have to track that with your working capital loan interest also. Is it better to get the money within 90 days or the customer pay it in 180 days, which is beneficial for you from the interest standpoint of view? That also need to be tracked.
Perfect.
Those are actually action points or like kind of action items, what comes out of the MIS.
Okay.
Yeah.
Thanks.
Okay. Anybody else have any question? If not, we'll wind up the session now. Okay. So
Will you be sharing the PPT also?
yeah, PPT and the template would be shared with everyone.
Yeah. Yeah. Thank
Also,
you.
I request you to join the WhatsApp group. So in that WhatsApp group, we typically provide all the details and everything, collateral also. Okay. So thank you, everyone. Thank you for joining the session and thank you for asking the question. I feel that I hope that the session was useful. And we'll have a next session maybe like end of on 30th of Jan, the Friday after the next Friday. Okay. So thank you, everyone. So bye. Have a nice day.